Good afternoon. I'm Bill Darcy, CEO of the NKBA. Thank you for joining us this week for NKBA Live, Brave New Business. I hope everyone, your families, and colleagues are healthy and safe. Our topic today is weathering the storm, navigating the stimulus package. In addition to our health crisis, there are difficult financial consequences as a result of COVID-19. Right now, we're going to talk to the experts from the finance sector about the federal stimulus package. We selected UBS Financial Services to talk with today because of their longstanding relationship with the NKBA. They have been working with our management team as well as the NKBA Finance Committee and Board of Directors to oversee short and long-term investments for many years. I'd like to welcome our guests from UBS, David Murphy, Senior Vice President, Wealth Management, and James Jack, Executive Director, Head of Business Owners Client Segment. Just a little housekeeping before we begin. We'll have some time for questions at the end, so please type those in the Q&A function at the bottom of your screen, not the chat, please. If you type in the Q&A area, your questions will remain completely anonymous, and our team will get to as many of them as possible. We're happy to say that today's session qualifies for 1/2 CEU credit for NKBA certified designers. And I also want to take a moment to thank NKBA award-winning designer, Cindy Appleknap-Yates, for the use of her beautiful kitchen design in my background. Okay, let's jump right in. Dave, can you give us an overview and then turn things over to James to share his expertise?
Thanks, Bill. We are here today to discuss the new coronavirus relief program that recently passed Congress. It is designed with small to mid-sized businesses in mind, but like most government programs, there is some confusion as to who is eligible for relief and how to apply. So today we hope to shed some light on this beneficial program and reduce some of the uncertainty behind it. UBS has studied the eligibility rules and has come up with some practical solutions that should be useful to you and your company immediately. So what I'm going to do is turn the webinar over to James Jack now, who is an executive director with UBS, and he will guide you through the highlights of this new relief program in a concise and hopefully thorough manner, including who is eligible, how and where to apply, and what are the guidelines. So let's get started. I'll turn it right over to James Jack.
Thanks, Dave, and thank you, Bill. Thank you, everyone, for joining me and letting me join you guys today. I just saw a question pop up on my screen. It was something we were talking about in the pre-meeting. Is this for Canadians or Americans? So I'm going to focus on the U.S. stimulus package. That's really my area of expertise. But I will say early on is that if you are Canadian or whatever, you still may be eligible for the U.S. CARES, the Paycheck Protection Program, or PPP program, because the program is really about supporting and helping American employees. So if for example, if you are not a U.S. citizen, but you happen to have a store in the United States with American workers, you're still very much eligible for the program. And maybe one other point, if you are Canadian or wherever, my advice to you would be to seek, your local advisors for information about whatever programs they may be having. I know that there's a few folks on the management team here who are Canadian as well, so there might be something in the future. But my expertise and area of focus is on the U.S. rules. So hopefully that sets kind of the ground stage of what we're going to talk about today. I'll just start really about, this is a really critical time. I'm sure many of you with your own businesses are very anxious and concerned about what's going on, and not to mention concerned because the news seems to be changing almost every day about this program or other programs like it. And so my hope is that by the time we're done today is I can give you a little bit of insight about where is the program at right now, what's changed in the last few days, and then really start to dive in a little bit deeper about the specifics of this program. I'm hoping that many of you have gotten the loan already. And so are just kind of wondering what the specifics are, what you need to do for going forward. And so we'll talk a little bit about that. I'll also talk a little bit about the conversations I've been having with your peers, with business owners. As the head of the business owner client segment for UBS, my focus is working with our advisors like David to bring advice and guidance on business owner topics. So that's the ground, kind of the ground rules I was hoping to get through. And so what I plan to do is I have a few slides. There's more slides that we can get to you that provide much more detail of the programs. But we'll keep them up we'll keep, one or two of these slides up for a little bit as I go through it, and we'll go back. But just know that there's certainly a lot more available, a lot more information available to you if you'd like. So the coronavirus is impacting business owners. And so as we all know, there's been a bunch of different programs. So there's 3 that we'll talk about high level today. And actually maybe 4, because there was a 4th one that was just added. But we'll really focus on the Paycheck Protection Program. So the other 3 programs before I get into the PPP program are the Economic Injury Disaster Loan Program, or EIDL. It's in the top left box on this. That's a program that's, it's a loan for up to $2 million with up to a 30-year maturity. And it's available for nonprofits and small businesses at 2.75 and 3.75% annually. But this loan requires underwriting, collateral, and a personal guarantee if the loan is more than $200,000. So it's much more like a traditional loan, but it's at long-term and low rate. And it's not forgivable like the PPP loan is. So you do have to pay this back. And if you don't, there's an impact to your personal credit. One interesting thing about this program, though, is it allows up to $10,000 for an emergency grant. So you can get that. That's forgivable. That's just, if you ask for it right when you apply, you can get that. And you apply for this loan at sba.gov. It's all done on their system. I have yet to hear a single person who's actually gotten it, though. I think everyone's kind of focused on the PPP loans first, and then they'll get to the EIDL loan. And a question I get commonly is, can I get both the EIDL loan and the PPP loan? And the answer is yes, you can. However, you can't use them to pay for the same thing. So you can't use them both to pay for payroll, for example, or both to pay for rent. We'll talk a little bit more about allowable uses with the PPP program, but really a lot of the specifics on it are fairly vague, and it's kind of all managed by the SBA. The other 2 is the one right below that, which is loans for larger businesses. I won't get too much into this one because I don't think it's entirely relevant here, but it's for people who have more than 500 employees. And with this loan, a lot of the terms have not been described yet. Again, it seems as though you go directly to the Treasury for these loans, and they're meant, again, to maintain payroll, but there's a lot of limits on compensation and stock buybacks and things like that. So unless there's more specific questions that people have more than 500 employees, I can go into it later, or we can have a chat. But effectively, I don't think that, based on what I've just spoken with Bill and Leanne and everyone, it's entirely relevant for this audience. And the 4th program, it's not on this page here, but it was announced last week. At the end of the week, it's called the Main Street Lending Program from the Federal Reserve. And again, the rules on that are not finalized yet. So there's just basic stuff that's come out. We expect over the next week or so that more will come out of that. But basically, that one is for small and mid-sized companies up to 10,000 employees. Larger loan sizes, $1 million minimum, up to 25 million potentially max, if it's a new loan. So again, it might be a little bit outside of some of the businesses here, but that's another program that's available and being kind of finalized, and we'll know more about that in the next few weeks. And if that is of interest, we can certainly find out more information and get it to Bill to get to you guys. but the main focus is the PPP program. So first, let me address probably the elephant in the room on this call. Is the PPP program is a first come first serve program up to $349 billion. And the interesting thing, I guess, about it is that the program's running out of money. It actually probably already has run out of money. And only, I think it's something like 1.2, 1.3 million people have gotten this loan. There's millions of businesses in the United States that are potentially eligible for this loan. So what does that mean? I think the good news is that we expect this program will get something like $250 billion of additional funding. It's just a matter of when. Last week, Senate Republicans tried to approve a clean add $250 billion by unanimous consent. It was blocked by Senate Democrats to add additional funding for other areas that are concerned to them. And so, it's, I think, all of our hope that they come to an agreement fairly quickly, because as of today, really, unless you've been approved, you're kind of in limbo. And there's, thousands and thousands of people who've been gathering documents, submitting information, and are now left in the cold. So what I would say is to you is, if you're one of those people, is stay patient and remain, and remain as calm as possible, because we do think that the funding will come. And when that happens, the next tranche will open up, and hopefully your lender will start moving you through the process. So that's just something I wanted to get out right away, because we're monitoring that, and we'll look for it. But don't think that just because the program has ended, that at least it has run out of funding today, that you've missed the boat, because I think we're fairly confident that they will get more funding, and then loans will continue to be worked on. So with that said, let me give a little high level. Let's lay the ground rules of what the program is, get everyone on the same page, and then maybe we can use some time for questions that you guys may have on more specific things to your businesses. And I've gotten some questions in advance, so I'll try to address some of them ahead of time. So the PPP program, it's for small businesses with U.S. employees of fewer than 500 U.S. employees. So what does that mean? It means if, for example, your business operates in both, the United States and Canada, let's say, the employees who are not American, in this example, Canadian, don't count towards your 500. So if you had 600 employees and 150 of them were not American, didn't live in America, it's the residence is what matters here, then you're still eligible for this program. That was a change that they added about a week ago. And so that actually, makes more businesses eligible, which is great. And the loan size is based on two things. So it's either $10 million or 2.5 times your average monthly payroll, whichever is less. The actual formula also includes if you have an Eidl loan that I talked about before, but my guess is overwhelmingly that doesn't apply. So just keeping it simple, it's 2.5 times your payroll. A question we get often is it my 2019 payroll or is it my last 12 months? And the answer is really both. The Treasury says you could use either one. So some lenders may have said, okay, it's only 2019 or it's your last 12, but technically the rules are you can choose between which one you want. And what you need to do is, as a business owner, you need to gather as much evidence for your payroll as possible. If we could just put that slide back on that we were on just at the end real quick for a minute. On the left-hand side, I listed all of the things that the government says are payroll. And so it's salary and wages, commissions, cash tips if it's like a restaurant, payment for vacation, parental, family, medical, or sick leave, allowances for dismissal or separation, so laying someone off, a package, payments for provisions of group health care benefits and insurance premiums, payment for retirement benefits like 401k plans or profit sharing plans, and the state and local taxes that might be assessed for employees. If you don't have employees, but you're an independent contractor or a sole, a sole proprietor, you are also eligible for this program as of last week. And so for those folks, you get to include your compensation up to $100,000 in 1 year, prorated for the period. So effectively, 100,000 divided by 52, times, and so that will get you kind of your weekly number, and you can then calculate that times 2.5 for the monthly version of that. So that's what you include. What do you not include? And this people get tripped up on a lot, is there's a limit on up to $100,000. And so if someone makes $150,000 as an example per year, you can include up to $100,000, but not the second, the next tranche of 50,000. So it's not that you don't get to count them at all. You just only get to count their first 100,000. And then related to that question is, well, what if, they're getting retirement benefits or healthcare benefits? And so you still get to count those too. So let's just say, as an example, someone makes $120,000, which includes retirement and healthcare. So it's $100,000 plus $20,000 for those other things, as an example. So you would get to count the full 120. You get to count them to 100 for salary, and then anything above that in terms of the retirement benefits and salary benefits. So it's only the salary portion that's capped at $100,000. You don't get to count taxes for payroll or income taxes. There's a slight nuance to that, which just came out 2 days ago. This is one of the great things about this program, which I'm saying that sarcastically, is the program is not finalized yet. It's changing every day. So we're kind of riding the bus while building it. But originally it was you don't get to include payroll taxes, but you can actually include the portion of payroll taxes that an employee pays. So only the employer taxes aren't included. So that could make a difference. And then certain credits that for family leave from the coronavirus, the second phase of the simulation of the stimulus. So that's what you need to calculate. And then the question becomes, what can you use this loan for? And you get to use this loan for, which is in the kind of the middle box here on the right-hand side, payroll costs, like I described before, mortgage interest, rent, and utilities. So utilities being electric, gas, water, transportation, phone, and internet. Those are what you're allowed to use this for, and this loan can be forgiven. So there's no personal guarantee, which is great. There's no traditional credit underwriting, unlike the Eidl loan. All they're looking for is your average payroll, getting that number, and then you can potentially get this forgiven, which means it becomes a grant. Important point that we get is, if it becomes a grant, does it count as income for my taxes? And the great answer, at least federally, is no. There's a special kind of dispensation that this is a one-time thing and won't increase your income for your taxes purposes. So you get to use these loans for these things, and it can be forgiven. The rub, though, is that whatever you get forgiven, 75% of that has to be used for payroll. I'll say it one more time. Whatever you get forgiven, 75% of that has to be used for payroll. So the question that's going to happen is this. You're going to get a loan. Let's just say it's $100,000 for sake of simplicity. If you want that loan entirely forgiven, at least $75,000 of it, 75%, has to be used to pay people. You can use $25,000 to pay for mortgage interest, rent, or utilities. That's the first thing, right? The next thing is you need to determine how much of that you'll actually get forgiven, because it's not all or nothing. A common question we get is, how do I actually get it forgiven? Is it 100% or 0%? And the goal of the program is to keep people employed. And so if you understand that really sets the foundation for this forgiveness calculation. And I'm going to say something here which is the forgiveness rules have not actually been finalized. So we're 2 weeks into this program, and the government has actually not really specified a lot of the rules on this. So what I could tell you is what we know right now. And so they've created this formula that's on the bottom right of the page here, which is how do you determine the amount that can be forgiven? So before, I was talking about that, whatever you get forgiven, 75% of it has to be used for payroll. Here, we need to find out what you can get forgiven. So let's go back to our $100,000 loan example. If it's $100,000, the question becomes, how much of that 100,000 can I get forgiven? And they do a calculation. And the way to determine that calculation is you see how many employees did you have on a full-time basis for the 8 weeks after you get your money. Okay, so let's just pretend that you had 9 people employed during this 8-week period. We're going to keep it simple. You're going to take that 9, and that's going to be your numerator. And then you're going to divide that by the denominator. And the denominator is a choice. So for most employers, I'm sure everyone on here, you get to choose. If you're a seasonal employer, you have to use February 15th through June last year. But assuming no one's a seasonal employer here, given the audience, you get to choose. And so what I would advise you all is look at the number of full-time equivalents you had in your business from February 15th through June 30th of last year, and compare it to January 1st to February 29th of this year. You want to pick the number that's smaller. So let's just pretend that of the two numbers we had was 10. So if we go back to our example, we have 9 employees now, but back during one of those 2 periods, I had 10. So that means I've let someone go or someone has left in this example, right? So 9 out of 10, they're going to run the math and say 9 out of 10 is 90%. So that's how much you can get forgiven. So if it's 90% times 100,000, that means I can only get 90,000 of it forgiven. And then the next part is, of which 75% of that 90,000 has to be for payroll. It's kind of clear as mud, right? You have to really think about it in that sense, is how many people do I have now? How many people did I have then? That will help determine what I can get forgiven. And then part 2 of that is, of that I can get forgiven, at least 75% has to be used for payroll. And the reason for all that is they don't want you laying everybody off using this money to pay for your rent and utilities, and then taking advantage of what's in the green box on the bottom, which is an exception that if you bring people back by June 30th, it's as if they were with you the whole time. So let me talk about that for a second.
James, can I ask you one question?
Yeah, Bill, go ahead.
Just on, maybe it jumps too far ahead, but on this additional stimulus, I did hear some things about, the challenge with companies, 75% of payroll and the 25% balance is not enough to carry me to the next months, so it's great to engage, and I mean the goal to keep the employees, but if I don't have if that 25% doesn't let me pay my bills, it's not effective. So have you heard anything about the additional stimulus of potentially balancing that more, 50-50 versus 25-75, or anything about that?
Yeah, so that's one of the most common things that in the discussions I have with clients is they say, well, it's all well and good, but that I'm getting this, but what if I'm not back up in business in June? Then we haven't really achieved anything. So that's a common concern from business owners. I think if the issues with the economy being shut down by the government continue into the summer, there will be a revision to this law that will allow some changes. That's my feeling. In terms of the 75% being used for payroll, that I do not think will change, because the goal of the program has always been to maintain payroll. They don't want people using this to pay rent or mortgage or something else. So I don't think that will change. I mean, it's possible, but that was something, that 75% rule was put in after the fact, when they had time to think about it. And they provide pretty concrete reasoning as to why they went that route. So I don't think that will change, but what could change is that if this thing goes on for so much longer, that the dates may change, that the 8-week period, so all of these costs can only be used for the 8 weeks from when you get the loan. That might change. They might say, okay, you can actually do it for 10 weeks or 12 weeks. Your loan won't change, but at least it gives you more flexibility. So they may do that. That I see could potentially happen, but I think if that does happen, that won't happen until sometime in May or even June. The $200 billion or $250 billion expansion, they're trying to keep that as clean as possible. It's just adding on more money to get more people the loan. Then the intricacies of figuring out the rules, I think, will come, if they do, will come later.
Let me ask you another question if I could. I don't mean to be
Yeah.
rude to our audience. We have so many questions in the Q&A. I'm trying to read the Q&A and stay engaged with everybody on the camera. But
No worries.
can you talk about the furloughing? If companies furlough employees for a period, say until June 29th or for a period, and then bring them back, will they still be forgiven or not?
Yeah, it's a perfect question, because that was literally the next thing that I was going to talk about. So great, we're on the same page. So that the rule states that if you've let people go already and you bring them back by June 30th, it's as if they were with you the whole time. So in that scenario I gave before, where you had 9 people now and that's your numerator, but you used to have 10, so you laid someone off. If you brought that 10th person back on June 29th, let's say, it's as if you had 10 as your numerator, and therefore your forgiveness goes back up to 100%, even though you didn't pay that person at all, right? And so that's why that 75% rule is, because if I laid everybody off and then used my money to pay for rent and utilities and then brought them all back on June 29th, I didn't give anyone payroll and I just paid my rent. That's why they added that extra 75% rule, if that makes sense. So the question about furloughing and what should I do on that, it's a great question, and we have this conversation all the time. And obviously it depends on everyone's specific situation about what, your business. But my advice is you should do what's best for your business so that it can stay alive and survive. And if that means that some people have to be their hours reduced or maybe even furloughed or laid off, I think that's a decision you might have to make. Now, the timing on bringing them back and them not hurting you, that has to be done before April 26th. So you only really have 10 days from now to make that decision. So the timer is going. So you want to come up with a decision now. More often than not, though, we're hearing from business owners that say, I laid someone off, but now I don't know if I can get them back on June 30th because they're getting an extra $600 from the government on unemployment benefits. And that's a real concern. And I don't fortunately have an answer for that, because it was something that was recognized as, well, we're making kind of a moral hazard on some folks. So I think it's got to be something like a conversation with your employees and say, listen, I don't have the money to fund you because of what's happening to pay you. But what I'm thinking is I furlough you, so you get your pay plus $600 from unemployment, and then I'll bring you back on June 29th, and that will allow me to, or by June 30th, whatever it is, and that will allow me to get this loan forgiven at no penalty, and we can keep the business alive, and then you'll be back. And hopefully, we're sharing in some of the pain equally. That's what we're seeing a lot of conversations on and people thinking that through. But it's certainly not an easy one. And it's not something I can provide, here's what you definitely do. But the other thing you need to be thoughtful of is each state, each local jurisdiction has their own rules about laying people off and furloughing them, and depends on the size of your company. So you need to talk to your tax and legal advisors as well about, how do I make those decisions? Because am I triggering something else that, in one state happens where in another state it doesn't? And usually that's for much bigger businesses. But talk to someone who's got kind of some expertise there, because it definitely make a difference for you as a business person.
Well, I hate to say we're out of time, but there's so
Yeah.
much here, James. Thank you so much for you and Dave for being on with us today. I know you have other things to run to here, so we want to let you go. But again, I think it's been very valuable. We'll hear the feedback. We'll try to get some of the questions to us and try to get those members' answers to those questions. We'll throw up a slide at the end that will give some contact information for David and to see if anybody, at EBS will help these folks. If you want to get deeper though, certainly refer you to UBS and to set up your own, private direct conversations with them. But we hope to bring the value here from NKBA to everybody. We will be posting a recording of today's Brave New Business on NKBA YouTube channel and Facebook page. So if you were taking notes and you wanted to rewind and do that, you'll be able to do that. Next Thursday, we'll talk about harnessing the potential of e-design with interior designer and e-design expert Jenna Gatuzek from Gainesville, Florida. She's a founder and CEO of E-Design Tribe. Joining her will be Jeremy Bauer and Jason Clifton, NKBA members and partners in Bauer Clifton Interiors, an interior architectural and design firm in Alaska, where certainly digital communication is a vital tool. Stay safe, everyone. Thanks for joining us. Hope you saw value in today. We saw so much in the Q&A, and sorry we couldn't get to everyone's questions live. James and David, thank you again for being with us for this edition of Brave New Business. Everyone, see you next week. Stay healthy and safe.
Thanks, Bill.